Folks, this is Tom O'Brien of TFNN. We go 5 days a week. We go 7.5 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. Let's make it a great night, folks. Don't take anything personally. Transform your life. When you refuse to take things personally, avoid many upsets in your life. Your feelings of anger, jealousy, and even sadness will simply disappear if you don't take them personally. It's not too easy. It's easier said than done, isn't it? Market-wise, let's take a look at it out here. We have the Dow Industrials down 15. Nasdaq is up 69. S&P is up 10. Gold contract up $11.70, trading $18.67 an ounce. Silver up 72 cents, $25.30 an ounce. Light sweet crude up 18 cents, $47.80 a barrel. Notes and bonds. 10-year note up 2 ticks, trading 137.29. The 30-year up 4 ticks at 173.01. And King Dollar. King Dollar is, where is she? Down 72 ticks, 90.40. The euro is out here at 121. The yen is at 103.57. And the British pound is at 134 to 1 U.S. dollar. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? Bottom line, we're just about at all-time highs out here inside the SPY. You do have a contraction of volume again, but what else is new in the marketplace? The high actually was last week out here at 371.05. Right now you're at 370.38. You got 36 million shares traded. You know, yesterday we did 64. It won't even do, well, it might do 64 today. Bottom line, you don't have buyers up at these highs. NDX 100, same type of setup inside the NDX. The 3Qs right now up $1.82. I believe this is all-time high for them. Let me see. Yeah, it is all-time high. 309.33 we hit. And gold. Let's go to the gold contract here. You know, if you were away from the computer a bit, you know, gold's up $11. You wouldn't think that, you know, no big deal. Well, you had some volatility in this market today, folks. No doubt we got up to a high in the morning out here at a price point of 1668. And we go flying down when the Fed came out at 18, sorry. We got up to 1870. We get down to 1848. It comes all the way back topside. Right now, you're at 1866. Silver also has caught a big bid. Now, that bid never actually went down that dramatically. Silver, 70 cents up. You have 89,000 contracts. There's big contract volume in both of them. Bottom line, silver wants to go to $30. Right now, you're at $25.33. In fact, you might have an ABC structure up here, too. Let me just see how this just took this out. You do. You got an ABC up. We just took out the B point. The B point on silver was 83,000 contracts. We've done 89. So that, let's do this right now. So it's approximately $25, 10 cents short of it. 22. So it's $2.90 to be exact, which is going to get you 23, 24, 25. Now we're almost there, actually. 25. Actually, hold 2. Yeah, it's like $26, and right, we're already hit. This is going up to the next level is 26.27. I suspect we're going to $30. When silver starts moving, folks, get out of the way. I mean, that's on both sides, whether you're going up or you're going down. Notes and bonds, this is going to be the story, though. Notes and bonds are definitely going to be the story. So check this out. You know, bottom line, well, here, let me give you the news on it, too, because the news actually gets this pretty straight, why the bonds did this. So picture, we're at all-time highs, folks, okay? You know, this has been happening forever. People think the rates are going to keep going up, back up, no matter how many times Powell turns around and says it's going to be lower for longer. Bottom line, what ended up happening is that the Federal Reserve right now is buying $120 billion per month, okay? And there was plenty of economists that wanted them to basically go out to the longer end of the curve, you know? And, you know, bottom line is that what ended up happening when they came up with this statement at 2 o'clock, they didn't say anything about bonds in general. What do bonds do? Bonds spike lower, meaning going higher in yield, okay? And then at their meeting, the bottom line is that, Powell's asked questions about it, okay? And what you had out here is this, is that, let's see, okay, so the 10-year Treasury, so, I'm sorry, I had this right in front of me. But the bottom line is that Powell said flat out that they are going to continue on their bond buying spree. They're going to basically give the market a big heads up if, in fact, they are going to change that. And needless to say, as that was happening, what did that do? That just sent the bonds higher once again. And I'll bring this up so you can see how this is shaken out. I'll bring up the 30-year right now. You're going to see that the spike lower was 172.04, and we're almost like 2 points higher than that right now. You can see the spike went down fast and furious. Then he basically clarifies in the press conference. Bottom line, lower for longer is going to be where it's at, folks. That's where this whole thing is shaken out. We got to take a look at the dollar. The dollar, same type of setup inside the dollar. Statement comes out. Dollar is negative. Dollar goes positive. Guess what? Dollar's going to 88, folks. And right now you're trading out at 90.402. The spread out here in the dollar did get up to 90.704, but guess what? Couldn't hold price. That's how it's shaken out. So, what you're going to have out here, and as they were talking about the aspect of the economy, we can go over a lot of these different things, but the bottom line is that money's going to get fed into the system until the employment comes back, as well as what they're looking for is that they're looking for inflation to come back, and he thinks that is going to take quite some time, and it really doesn't have the aspect of when it will come back. But he thinks it's going to take longer than any of us actually think, okay? He says it's possible, this one's quite a quote, it's possible that the Fed expands its asset purchase program, but policy changes act with long and variable legs as the axiom goes. We have the ability to buy more bonds or buy longer-term bonds, and we may use it. I'm not saying we won't use it. Monetary policy works with long and variable lags, so we think that the big effects of monetary policy are still basically in place. Stay right there, folks. Come right back.